Well, I mean, the London market is far from dead. And if you compare the size of the London market to any other European market, it's bigger than probably most of them combined.
This is a bit of a turn. Government, business. Sure, you know what I'm going to say, don't you?
I think private equity is starting to wake up to the fact that whether it comes to our ability to raise money or our ability to do deals, our reputation counts.
Welcome to this edition of Talking Markets, and I'm Michael Wilson, and joined by my good friend and companion of the canyons of capitalism, I think we put it like that, David Buik.
For decades.
For decades, yes, certainly. Good morning. And I'm very pleased to say, joined by a special guest, a very special guest this morning, Steffan Williams, who's joint CEO of Williams Nicolson, one of the country's leading financial PR companies. You were doing okay, and then suddenly you decided to have your own company. Maybe it wasn't that sudden. A, why? And B, when did you know you got the kind of critical mass to allow that to happen?
Why is because we saw a gap in the market. And my argument is, think of every industry vertical in the world. They've all been challenged by data, whether it's taxi firms, real estate, grocery, you name it. But the world I'm in hasn't changed. Basically, the same firms are out there peddling pretty much the same service that they were peddling 20, 30 years ago. And we thought, you know what, there's a lot of data out there, we can do something with that.
Just to interject before you carry on that, but the quality of people, Steffan, that you now employ, I would venture to suggest 3 times more intelligence when people who are monosyllabics and general throwbacks like myself did 40 years ago.
Well, you're being very self-deprecating.
No, I'm not. It's a fact of life.
No, look, you're absolutely right. Suddenly reputation management, PR, whatever you want to call it, reputation management, I think is the most accurate phrase, is a really big deal. And if you look in the risk factors in any annual report of any company, reputation will be top 3. And it certainly wasn't even 10 years ago.
And this is the growth of the stakeholder, so-called, isn't it, as opposed to the shareholder, so-called.
Yeah, in the same way that companies don't just focus on bottom line performance. When it comes to reputation, it's not just does the city think I'm doing a good job, it's do my employees think I'm doing a good job, or potential employees, or customers, and these things are all joined up and they all talk to each other. And as you know, the media can't be segregated into narrow channels like it used to be.
But you said in your introductory there that you saw a niche in the market. Could you be a little bit more specific about that without giving away trade secrets? Because obviously you, I would imagine, don't want to service 250,000 customers. You want to focus on where you feel you can make the greatest contribution to those customers' businesses.
Well,
right?
You've obviously been reading our business plan, but yeah, our thing is we don't want to be global and all that. Our thing is we want to have a small number of clients where we give a very high level of service. But the McKinsey, I think it was McKinsey maxim is you can't manage it unless you measure it. And we're saying, look, you can actually start to measure this in a way that you never could before. And that's through using AI. AI allows us to take huge amounts of data and analyze it at speed, and that is a complete game changer, hopefully without giving any secrets away.
We have talked in the past, haven't we, about the lack of IPOs, for want of a better phrase, in London, and you know, a lot of those are going to the United States, and yet you look at the mining sector, and there's 2 big ones, bashing hell out of each other. What does that say to you about the market? What's changed? What's allowed that to happen?
What's the state of the market? I mean, it seems to be at a sort of axis at the moment. Just interrupting Michael, which I didn't mean to, because we are in a negative position, but something actually feels a little bit better about things during the course of the last couple of months.
Well, I mean, the London market is far from dead, and if you compare the size of the London market to any other European market, it's bigger than probably most of them combined. So it's not a tiny pond in that sense. But it is true that New York keeps getting stronger, and ultimately, as the CEO of a business in any sector, you go where the money is. You know, if you think I'm going to spend 20% of my time this year doing investor relations, going to meet my current investors and prospective investors, where can I most effectively spend that time? For many CEOs, they judge better to do it in the US than the UK. And look, the other thing is, you don't get the same level of scrutiny in the US. You can, and dare I say, the media is perhaps a little bit more benign towards business people.
Well, it's also a bit more gung-ho, fixed burners and over the top, isn't it? Yeah. I mean, you can have some sympathy with ARM because in New York and in the United States, they've got access to so many more investors, which gives them a fantastic register for shareholders.
Yeah.
And people are chuntering and moaning and groaning about Flutter. Well, of course Flutter's going to go to the States.
That's where the growth's coming from.
Not only that, is that the United States has opened up gambling. Well, you're talking about, 324 million people as against 67, my case rests.
Yeah, 100%. I think Flutter was entirely sensible. But I mean, it can't be complacent.
No.
And I would love to see more listings happening on the London market.
Do you think that, though, that's where private equity, of course it has in the past, but now can see a huge opening for itself, because it, by definition, can. I know it's a different kind of mechanism, but it can raise a huge amount of money, can't it?
Yeah, well, two aspects to that, aren't there? One is valuations on public markets in London are quite low, so private equity, I think, looks at some of the pricing and thinks cheap as chips, we'll have that, thank you very much. The other way is, and there's been a lot of talk recently, hasn't there, about, we're kind of completely in rapture to this idea that it has to be the public market. Maybe the private market works just as well, or better.
I think the other thing, Steffan, and Michael, is that IPOs as a way of raising money is very expensive, incredibly expensive as against private equity.
And they don't always work.
No, but when you get to the bigger companies, and I want to go back to the comments that Michael introduced, which obviously is the BHP Anglo American. This is to me a fascinating bid. Why? It's cheap as chips, because BHP is, since I think I'm right in saying 1997, has gone up 1,150%.
Yeah.
Anglo-American's gone up 264%. And Anglo-American have bitten off more than they can chew. They got involved in far too many things, but they've been various things like Lafarge, the cement people. They've been Mondi, as you know, is now quoted on the stock exchange. But do you see somebody else? I know you, because you've got a slightly disease-ridden overtime imagination. Glencore. This is going to stir up the whole sector, isn't it? Or am I wrong?
Look, am
I wrong?
No, I think you're... I can't speak for Glencore, but
no, you can't.
But what I would say is, there must be a lot of people getting their slide rules out at the moment, both listed companies and unlisted companies, thinking, because some of the assets that Anglo have got are fantastically valuable, and I'm sure it'll freshen up the whole market, and people will be. Bankers will be energetically pitching takeover ideas all over the place.
Salivating is the expression. I think I would probably do with the prospect.
But you mentioned, Steffan, a few moments ago, regulation in London versus New York. Some people think that regulation in London is a good idea. Some people think it's more burdensome red tape.
Well, regulation is probably a good idea. So it's how deep it goes, and how onerous it is.
Yeah.
So I was with the CEO of a FTSE 250 energy company earlier on this week, funny enough, and it's listed in London, and not a business that has its operations in the UK. And he said, you know what? Right now, he said, we're going to stay in the UK. He said, but I can't tell you how burdensome it is, all the regulation. But he said, if we were listing afresh now, when we listed, which was over 10 years, it was 10 years ago, actually, he said it was a no-brainer, it had to be London. Now, we would definitely have to think about it. And it's partly the regulatory aspects. And, the regulation it's got to be effective, but it can't be onerous. There's that balance to be drawn.
Your friend, Dr. Carol Bell, when she was talking to Michael and I about an issue basically geared around energy and the cost of energy, she was supporting people like Harbour Energy, who was previously Premier Oil and various others. The fact is that there they are, here we are in the UK, and because they're so onerous about the level of being able to drill for oil, they're going off to Nigeria, which is scandalous, really.
Well, the reality is the world is going to need hydrocarbons, for the next, next decade.
Labour Party's not going to want to hear that.
Well, it's just a fact of life.
I know.
This whole charge for EVs, it's just not that simple. You can't just turn off one form of energy and switch to another overnight. It's simply not going to happen.
No.
And that's not only true in the UK. You mentioned Nigeria. I happen to know Nigeria very well. Soon to be 400 million people. By 2040, it'd be the third largest country on earth, almost
Good
certainly.
God, you know that.
Half people in Nigeria don't have access to electricity at all. They burn stuff in their back garden. And the other half have diesel generators in their back garden. So actually the argument is, if you put in a natural gas network in Nigeria, the overall emissions would go down, and they'd live longer, more prosperous lives.
Yeah.
And the argument, you talk to a Nigerian, they'll say, well, hang on, you had your industrial revolution, you took everything you wanted from Africa and elsewhere, you burnt whatever you wanted to burn, and now you're telling us that our people have to live without electricity?
Yeah.
That's a very imperialistic attitude.
Speaking of attitudes, are there companies whom you would not like to work with, and if so, how do you identify them?
Well, as a leader.
I don't think we'd work for companies that kill their customers. So tobacco companies, we wouldn't work for those. Unless tobacco completely, restructured itself.
So you believe in ethical investment, do you?
Well, from a point of view of the clients we work for, we want to be on the side of light rather than the side of darkness, really.
Okay.
And,
It's diminishing now from what it was 2 years ago. I mean, ESG was incredibly important.
Well, look at the defence sector.
That's what I mean.
And
energy as well. Yeah. Anyway, sorry.
But I think tobacco is a tricky one to. I mean, I don't oppose anyone smoking. I enjoy the odd cigar myself, as you know. But I think that's a difficult one to get behind. As in terms of our client roster, we definitely have a view that we want to work for non-autocratic regimes, democratic regimes. Biden made his big speech after the invasion of Ukraine, where he said there's a new, not iron curtain coming exactly, but a new divide, and it's between autocracy and democracy. We're definitely on the democracy side.
Yeah.
You skimmed very quickly, and I think it's a very key part of your business going forward, AI. Now, your superb partner, Williams Nicolson, is, I know, the definitive character in this as regards your business. Tell us where you think public relations, particularly financial ones, is going to benefit hugely from AI, and are you frightened of AI?
Well, for the former, I think it's interesting. It's not just public relations; it's every industry. There's like a mad scramble for AI. AI is one of those buzz acronyms that everyone's talking about, and I think there probably isn't a boardroom in the world, is there, where people aren't saying, "Oh, we should probably do something about AI." And I'm sure there's lots of businesses that, again, having a slide rule run over them. Dark Trace has just gone, for example. I mean, there's a lot of interest in that kind of stuff. Yeah, I mean, for us, and I'm not the expert. Louise and Lucy, our head of data, really are the experts. For us, it's a game changer. As I said before, that ability to look at data, in vast quantity very quickly is a complete game changer. So I think there's going to be two aspects of an AI. One is an awful lot of corporate activity. I think there'll be a whole load of M&A. I'm sure there is already in AI. And then, my particular industry, I think, is going to be completely turned on its head. I think it's one of those watershed moments where, if you grew up on black and white movies and then you see a colour one, you're not going to go and watch black and white ones again. I think it's one of those moments.
Yeah. I mean, I did a very short interview with a company called Buik about 6 months ago. It's a biotech. We were just loosely talking about AI, and he said, stop. He said, it's fundamental.
Yeah.
He said, if I was giving you, as a guinea pig, pay 500 quid to have a couple of injections to see how you were getting on with arthritis, just for the sake of argument. He said, before I would get that out, finished with the 3 lots of injections to see how you reacted, he said, it would be 15 months. It's 5 weeks now.
Yeah.
Phenomenal. I mean, it really is.
One of our products, when we first decided what we wanted to do, we did it manually, and it took us 6 weeks. Well, the client was very happy with the results, but 6 weeks is quite a long time to produce anything. And we bought some services from a company that helped us automate what we were doing. And I remember there was a conversation where the CEO of this company said, terribly sorry, he said it's quite a complex task and it still takes quite a long time. And we said, how long do you mean? He said, sometimes it can take 10 minutes.
CEOs, now there's a thing. So, from the media side of things, I am still amazed that more CEOs don't put themselves forward. They have to, in terms of board meetings, they have to report four times a year, it's et cetera, and yet they don't stand up. Now, there's two ways of looking at that. The first is to say, do you know what? I'd rather they just go on with what they're good at, which is their job, and there's no need to be a sort of performing show pony. At the same time, it's quite useful to get the whites of the eyes, isn't it, to find out why is it in this country it's completely unlike the United States, where everybody's got a soundbite.
Well, I agree and disagree. Look, I mean, I think not everyone loves the media. So if I said to you, who's the CEO of the world's biggest bank? You know who that is, right? JP Morgan. I said, okay, who's the CEO of the world's second biggest bank? You probably got no clue. So not all CEOs are up for it.
Well, it was Noel Quinn, but never mind.
Anyway, what I was going to say is that I think the thing is the world is changing, and the idea that you can not participate in the conversation, if you define a reputation as a conversation that's being had about you, to not participate in that conversation means you're not optimizing how you're seen. And I think that it's going to change. But from a CEO's point of view, you see, CEO of especially a large company, everything you do is controlled by you. Every minute of your day is controlled by you.
How much influence can you bring to bear? I mean, I think Michael and I are interested in the fact is it the role of the PR company and his client, who may be fearful of the media, to tell them, look, stand up and be counted, don't be frightened of them? Is that one of the roles that you play?
So sometimes, yeah.
Or are you always doing it for them, if you understand what I mean?
Well, honestly, it's a mixture.
Okay.
And there are times when we will engage with journalists or have our clients engage with journalists completely on background. So that CEO I met earlier on this week, I took him around to a load of meetings with some very high-profile journalists, very important journalists, so he could introduce himself and introduce his firm. So that then in due course, when he's got stuff to say, they know each other. There's some kind of relationship there. So it's not all on the record. And look, I mean, for a CEO, an on-the-record interview, that's a high-wire act. That is terrifying for them. And so I get why they're nervous, but so I certainly wouldn't put them out there all the time. Having said that, you know better than I, some CEOs love the limelight, don't they? Some CEOs, you can't get them off the TV.
And some CEOs happen to have their jobs for quite a while, and some don't. I mean, some are there for a couple of years, aren't they? And then that's it. And I don't blame them for fleeing the media in lots of ways. Of course, we're the enemy, but that's the game, isn't it?
But even
sorry, go ahead.
I was going to say, even in private equity, I think that's changing. I think private equity is starting to wake up to the fact that, this, whether it comes to our ability to raise money or our ability to do deals, our reputation counts, and we have to have some kind of communication effort.
If you're a manager rather than somebody like Sir Martin Sorrell, who built WPP and he was an investor and a founder, don't you think 5 years is long enough for a CEO? Don't you need fresh ideas after that, or does it depend exactly on what the situation is?
Well, I suppose the most with a listed company, the most straightforward answer is it depends on the share price performance. If you keep outperforming the sector decade after decade,
why change?
Then no one's going to fire Warren Buffett, right? And he's doing a perfectly good job.
Yeah.
But I think the point is CEOs have to be answerable ultimately, and a bit like anything, political parties or whatever. I think freshening things up every now and again probably makes sense. But some CEOs have that mercurial ability to just carry on,
He's got a phrase about getting the drains up, and you're right. Of course, you're right. I mean, that's the way for investors is the way to look at companies, isn't it? See what the management team's like. Do you recognise any of those names? Have they had experience before? I mean, this is fairly basic stuff, but this is what you can actually do, can't you? This is why I somehow feel that CEOs ought to maybe make themselves a bit more available.
I agree with Michael, but just to add on to that. There's a lot of fuss recently about executive pay. I mean, take Pascal Soriot. He's out of AstraZeneca. Works out of Australia, which is not really my idea of fun, but it works.
Yeah.
And they have delivered. And if he makes £18 million a year as CEO, I don't have a problem with it if the share price is right. Are we being a little bit, how can I put it, narrow-minded here in the UK, or do you think that there's a lack of realism?
Well, my personal view is I think we're overly obsessed with remuneration, and lots of business journalists, their first or second question is how much did he get paid last year, which I think is not always or often isn't the most appropriate question. There's also the role of these advisors, the people that advise investors on which way to vote. I think that's quite a murky area. I mean, a member of a board recently was telling me that the advisors were saying to his investors, vote against him. So on the one hand they're saying that, on the other, that same advisory business was saying to him, do you want to pay us a fee and we'll advise you on how best to engage with us? So I thought, wow, if that's not a conflict of interest, I don't know what is.
There's also political as well.
Yeah, and there's also a lot of smoke without fire in the sense that you read a lot of stuff about executive pay, and then 15% of the investors oppose it. I mean, most investors, I think, can tell whether somebody's doing a good job or not, and I'm sure they listen to the advisors, but they make up their own minds. That's how it should be.
This is a bit of a turn. Government, business, etc. You know what I'm going to say, don't you?
Right.
I mean, do you feel that it is the role of government to help business, or do they create an environment where business can thrive? Because it seems to me as what happens in the United States. I'm not sure. I don't know. I mean, Biden, one way or the other, very difficult, very difficult to tell. But in this country, for example, corporation tax is a big bugbear of lots of stamp duty as well.
Well, I bet there's no business that would want corporation tax to be higher. That's for sure. No. And I think generally most business people I know, they want government to get out of the way. But equally, there are parts of the economy where you think, well, perhaps the government should get involved. I mean, look, fortunately, I'm not a commuter by train. If I was, I think I'd probably be saying privatise a lot of them and run it, not for profit. As a keen fly fisherman, I'm not so keen on water companies being in charge of our waterways. So it's horses for courses, isn't it? But most of the time, I think, it's that Ronald Reagan quote, isn't that? The 9 most terrifying words in the English language. I'm from the government and I'm here to help.
Yes.
Yeah. Final question from me. Messrs. Starmer, Reeves, Siddiqui and Reynolds. Are we going to be okay? Are you worried? Are they strapped? Is they limited to what they can do? Do you think they could contribute more to business in the current administration, which has been obsessed with its balance sheet rather than getting on with business?
Yeah, look, I mean, I hope so. Reeves is, she's impressive, right? And she's got a background in Bank of England that speaks for itself. I think they're going to have to stimulate growth because the kitty's kind of empty. So they're going to have to,
there's no more borrowing, particularly.
Right. So you would hope they would come in with a pro-business positive agenda. And certainly all the noises you hear is that's the direction they're trying to go in. I'm not an expert on the Labour Party, but presumably there are elements of the Labour Party who are dead against that. But Starmer and Reeves seem to be
they've done
saying the right things anyway.
They've been the old smoked salmon bagel at breakfast has been going down pretty well.
So I gather. Yeah.
Michael.
Steffan, it's been an absolute pleasure to talk to you. Thanks very much indeed for joining us on this particular podcast.
Fascinating. It's such an important part of the business story. I can't think of anybody better to put it across.
Steffan, thanks.
Gents, thanks so much.
Thanks very much
Pleasure
indeed.
as always.
And that's Talking Markets for this particular edition. Do join us again.